Welcome to WGU Prep YouTube channel. Access all practice questions. Financial Management. Practice questions with answers. Question 1. What is the primary purpose of financial management? A. Maximizing sales. B. Maximizing profits. C. Maximizing shareholder wealth. D. Minimizing expenses. Which one is the correct answer? The correct answer is C. Maximizing shareholder wealth. Explanation. Financial management focuses on increasing the value of the company for its shareholders. This involves making decisions that enhance profitability and financial performance, thereby increasing the company's stock price. Question 2. Which financial statement shows a company's assets, liabilities, and equity? A. Income statement. B. Balance sheet. C. Cash flow statement. D. Retained earnings. Which one is the correct answer? The correct answer is B. Balance sheet. Explanation. The balance sheet presents a snapshot of a company's financial position at a specific point in time. It lists assets, liabilities, and shareholder equity, helping assess the company's stability and financial health. Question 3. What does the capital budgeting process involve? A. Financial forecasting. B. Evaluating long-term investments. C. Managing working capital. D. Cost analysis. Which one is the correct answer? The correct answer is B. Evaluating long-term investments. Explanation. Capital budgeting involves evaluating and deciding on long-term investments or projects, such as new machinery, plant expansions, or research and development. It helps businesses allocate resources efficiently. Question 4. Which ratio measures a company's ability to meet short-term obligations? A. Current ratio. B. Return on equity. C. Debt-to-equity ratio. D. Profit margin. Which one is the correct answer? The correct answer is A. Current ratio. Explanation. The current ratio compares a company's current assets to its current liabilities. It measures the company's ability to cover its short-term debts using its short-term assets. Question 5. What is net present value, NPV? A. Total investment return. B. Present value of future cash flows. C. Annual profit. D. Total debt amount. Which one is the correct answer? The correct answer is B. Present value of future cash flows. Explanation. Net present value, NPV, is the difference between the present value of cash inflows and the present value of cash outflows over a given time period. It helps evaluate the profitability of an investment or project. Question 6. What is the cost of capital? A. Rate of return. B. Gross margin. C. Debt financing cost. D. Market value. Which one is the correct answer? The correct answer is A. Rate of return. Explanation. The cost of capital is the return required by investors to invest in the company. It represents the cost of raising funds, either through debt or equity, to finance investments. Question 7. What does the debt-to-equity ratio measure? A. Profitability. B. Liquidity. C. Leverage. D. Efficiency. Which one is the correct answer? The correct answer is C. Leverage. Explanation. The debt-to-equity ratio compares a company's total debt to its shareholders' equity. It measures the company's financial leverage and the extent to which it relies on borrowed funds. Question 8. What is the capital structure? A. Debt management plan. B. Proportion of debt and equity financing. C. Profit distribution. D. Tax strategy. Which one is the correct answer? The correct answer is B. Proportion of debt and equity financing. Explanation: capital structure refers to the mix of debt and equity financing used by a company. The right balance between debt and equity helps a company maximize its value and minimize its cost of capital. Question 9. Which type of financing involves selling company shares? A. Debt financing. B. Equity financing. C. Bank loans. D. Bonds issuance. Which one is the correct answer? The correct answer is B. Equity financing. Explanation: equity financing involves raising capital by selling shares of the company. This method provides capital without creating debt but dilutes ownership among shareholders. Question 10. What is the purpose of a cash flow statement? A. To track profitability. B. To evaluate liquidity. C. To determine asset value. D. To assess financial leverage. Which one is the correct answer? The correct answer is B. To evaluate liquidity. Explanation: the cash flow statement tracks the inflow and outflow of cash within a company. It evaluates the company's liquidity, showing how cash is generated and used in operating, investing, and financing activities. Thank you for watching. For more practice questions, subscribe to our website at wgupracticequestions.com.